Good morning, everybody. Happy Monday. It's October 9th, 2023. Great to be with all of you today. My name is Bob Lang, and I run explosiveoptions.net, along with an amazing, wonderful chat room with some incredible people. There's the chat room right there. 230-something people in the room every single day talking about markets, charts, technicals. They're here with me. Trying to learn a little bit more about markets and economy and how things how we can do better and improve our performance in trading and investing. If you haven't had a chance to try out the chat room, I suggest you guys give it a whirl, give it a spin. You can get in there for a month for $139. Go to explosiveoptions.net and give it a test drive here. So that's that. So here we are Monday morning, and we're waking up to the fact that maybe another war in the Middle East is gotten underway. And we heard of an attack in Israel over the weekend, and by the Hamas group. It was a brutal attack, and Israel is not going to sit back and let this go. They're going to be very aggressive and have already declared war against Hamas. So how does it shake out for us in markets? Well, obviously this is one of those quote unquote black swans that nobody really expected to happen on this particular day. So so this is a big surprise for the markets, and you can see that it's being reflected on the futures being down close to 0.75%. The S&P 500 down about 31 handles. We did rally about 55 handles on Friday, so on a net basis, it's still a positive if you put the two together. Dow Industrials down about 200, Nasdaq down 130, and we see a pop in volatility, which obviously you would see that with this news about what happened in Israel. And why is volatility rising? It's just because uncertainty is now present in the markets, and we really don't know how things are going to shake out, what the consequences are of the attack, and how it's going to affect us here in the United States. So volatility rises as uncertainty goes up. And again, here we are right near the middle of October. We have about 11 weeks to go before the end of 2023, and we know that in some instances, this S&P 500 still sporting about 11% gain for the year. The Nasdaq also up about 34%. Now, underneath the surface, though, we know that those numbers are masking some weakness that we've seen all year long in the indices. And for instance, the S&P 500. I'm going to show it to you right here. I'm going to show you this chart here right now, but I'm going to get back to it because there's something I wanted to show you for the last few days. The S&P 500, again, as I said, is sporting about an 11% gain for the week for the year for 2023. But if you look at what's called the RSP, or the equal weight index, it's not doing nearly as well. And in fact, if we look at go back to the beginning of the year, the RSP started at around let's see here, let's go back here. It's the last day of the year. It closed at 139.33, and then Friday it closed at 140. It was actually below there on Thursday, 138.80. So with the week equal weighted S&P 500, which means that each member of the S&P 500 gets one vote. It's like the U.S. Senate. You get one vote. Doesn't matter what your population is in the Senate. Well, just like that, in the relative strength RSP equal weighted index, Apple gets the same vote as everybody else, right? They get one vote, one out of 500, and we notice the equal weighted S&P 500 is barely up for the year. It's rough, mostly flat, and we can see how far this index has fallen since the late part of July. It's down about 10%, right? From 155 down to about 140. So that's a sharp move down, and it's indicative of what's happening in the markets right now. We've also seen the Russell 2000, which is also an equal weighted index of 2,000 small cap stocks. That is also down for the year. It's down about 1%. And the Dow Industrials just about flat, which is a price weighted index, but it's not skewed based on market cap, right? So even though Apple is in there and Microsoft is in there, and so is Cisco, some of the higher and ExxonMobil, some of the higher market cap names in the S&P 500. We also know that the price weighted index is not skewed towards those high market cap names. So the Dow Industrials about flat for 2023 so far. So we have about a flat index, flat to slightly lower on the RSP, equal weighted, and the Russell 2000 and the Dow Industrials. Now, if we take a look at the Nasdaq, for instance, we know that the Nasdaq is up about 33, 34% for the year. But if you take a look at the equal weighted, right, which gives once again, much like the RSP, an equal vote towards every member, not skewed towards market cap. Remember, so the Nasdaq has been basically skewed by the FANG names and a few extra names. So you got Facebook, Meta, Google, Amazon, Tesla, Nvidia, and Apple, among a few others. So this index has been skewed this year by the strong performance in the first half of the year of these select names. So with the Nasdaq being up about 34%, if that is being skewed by just a few names, you would expect the equal weighted part of the Nasdaq to be lower, and that is indeed the case. It's only up about 14, 15% in 2023. So the average stock outside of the Nasdaq is either flat to down in 2023. All right. So, whatever people are saying in the media, whatever the numbers that you're hearing about, just aren't true right now. And, we know the markets are struggling. And here we are at a moment in time when people are going to see that they have profits in their stocks, especially coming off of a horrendous year in 2022. If they have some profits in their stocks in 2023, you could probably count on them taking money off the table. And then when you look at interest rates, right, the 10-year nearly touched 5% last week. It did come down a little bit, and interest rates are actually coming down. Bonds are getting a little bit strong today because of the safety trade following this news over the weekend. But I did want to shoot back to the S&P 500 just for a moment and show you something here. Let's see here. So the S&P 500 last week, right? It made an important low. It may have made an important low over here. This is pretty important. Right? So if the market is going to bounce, this is going to be a 4 days here where we basically came down about 420 on the SPY, or 4220 to 4230. Which was an area of a breakout and a gap fill back here in back in the early part of summer. This could be a very strong support level or brick wall holding up prices. If we do break below there, and we do break below this 200-day moving average, it's just above the 200-day moving average, could be a lot of trouble. We could be headed back down towards the break-even point in 2023, which is about 3,800. Okay, 10% down roughly from where we're at right now. But I'm watching this very, very carefully to see if this level holds. If we make a higher high and a higher low, probably not going to happen today because of the futures being down so much. But we are no longer oversold. Let's take a look at that chart here. We can see here on the McClellan oscillators, we see the Nasdaq is actually in the positive here. We were down minus 200 just about 4 days ago. The S&P 500 or the New York Stock Exchange oscillator is also moving on up. It's at minus 62, still mildly oversold here. But we'll have to see how things run over here. The heavy volume and the turn on Friday was extremely impressive. We were down about 40 handles at one point. After the jobs report came out, we finished up 50 something. So that wasn't even the high of the day. High of the day was about an hour or so earlier before the close. So we had about 100 point reversal from the lows to the highs on Friday. So that was a very impressive move, and you can see how impressive that was on Friday over here. We hit those lows from Thursday to Wednesday to Tuesday over here. And if this level holds here, that's going to be a pretty good fortress for stocks the rest of the year. Now, if we take a look at Fibonacci's here for a moment, let's trace some of that from the recent highs in July to that level, right? And why do we do that? Because we can try and figure out a target for where the markets are going to get to, right? And we can see that, interestingly enough, this gap here between the 38% retracement and 50% retracement is right in the middle of that. It contains that gap over here. So if the markets do get bullish into the end of the year, I think we're looking at a move towards this 4365 to 4400 level, and that'll be it. But if we don't perform well and we don't get the markets back up into this zone and beyond there, all right, I think we have much lower levels. I think we're going to be probably finishing in this area down over here. Again, if we're not going up, we're going down, right? So I think in this zone right here is probably a good area where the markets are going to land at the end of the year. It's if we don't move up. So we have two scenarios here. We could, if we're bullish and the markets do well, especially coming into earnings season, we have third quarter earnings coming out starting up this week. Pepsi tomorrow morning, some of the banks later on in the week. If they do well and the markets like what they hear and like what they see, and we start making a move up over here, well, then we've got some chance to fill that gap. Just about 4,400. Okay, we closed about 4308 here on Friday, so that's going to see if we can create a higher high and higher low. If not, then if we're inside day, we've got to wait until tomorrow and Wednesday to see how things unfold here. Something that I've shown you more recently, more frequently recently, and actually over the past couple of months, this has been really had my eye. This is the Nasdaq high-low index, right? This is the number of new highs versus new lows. And we can see that it's been troubling. And this is one of the reasons why the Nasdaq has underperformed most of the indices over the past 2.5 months, right? So since August, we've had, look at all these negative readings here. And what that means is that we've had more new lows than new highs. Now, it's not your NVIDIAs, it's not your Teslas, it's not your Apples, but it's a lot of these other stocks that are not performing as well as those other groups that small groups that have been tracking money since the beginning of 2023. So again, that's something that we need to keep a very, very close eye on, because it is a great predictor of how markets are going to do. It's a great predictor on how breadth is when breadth is extremely weak, as it is right here. This is what I'm showing you right now. We can see the markets following through at a later date. This happened in 2018 when breadth was really, really poor and markets were making new highs in October of 2018. It was 2 months later that the markets dropped 10% in the month of December. Okay, so keep that in mind. Not a big, again, not a big week of earnings, but we do have some economic data that we have to pay attention to. We do have PPI, Producer Price Index, coming out Wednesday morning, and then the CPI comes out on Thursday morning. So, and we have some other sentiment data coming out as well too. So, a lot of people were referring to market sentiment as being pretty sour the last month and a half. True story. And actually, we can see that reflected in some of the polls that we look at. But bearish sentiment is a kind of tenuous, right? And again, it can be shifted by events like we had over the weekend. It looks like momentum was going to start turning upwards, and all of a sudden it's turning right back down again. So what do we need? We need follow-through days, right? So Friday was a strong day. It wasn't a follow-through day. Right, it wasn't a follow-through day. We don't have a higher high and a higher low in place over the past couple of days. All right, so we did have a strong move up last week and on Friday, but it was masked by that strong move down on Tuesday and Wednesday as well too. Didn't really we didn't see much of buying going on those couple of days. So. So, I think what do we got to do? We got to sit tight a little bit. Again, I know that's kind of boring, and I know it's not really what you want to do, but you got to sit tight a little bit right now, and just pay attention and watch what's going on in the action here. And if there's some opportunities to trade this market, certainly go for it, but keep your time frame short. Take your profits when you have them, and keep high levels of cash and keep some puts on. Right, I have some puts on right now. They're probably going to be working for me today, unless the markets turn around to the downside. But I think that by and large, keeping some protection on is a good thing to have and on at all times. All right. So that's going to be it, everyone. Be safe out there. I wish everybody a great trading day. I'll be back on Thursday morning to talk it up a little bit and see what's going on just before or right around, well, we might be on a little bit later after the CPI number comes out. We'll talk about that and some other things as well, too. So have a great day, everyone, and trade well, and I'll see you guys all on Thursday morning. Thanks.